ARM Holdings. This stock has been getting my attention for quite a while and for a big reason. We'll take a look at some of that, why I'm interested in this, what kind of risks are involved with it, and where I see the price going from here in the near future. So let's start off. First of all, I have a little clip here from CNBC talking about one of the reasons I'm really interested in ARM.
ARM says it has some 6,800 patents worldwide, with another 2,700 applications pending. Some of those are for ARM's Neoverse line for high performance and cloud computing.
So the fact that ARM has so many patents reminds me of another company. It's not a very sexy company, or particularly one that is on well, not on everyone's list to invest in right now, and that'd be IBM. IBM has actually been chugging along for quite a while just off of their patents alone. And if we look back here in the 90s, when it came out, it had a bit of a low here. And just before it started launching off on the internet craze, the dot-com bubble, we had an increase of, let's see, what was it? It increased upwards of 700% in that run. Now, I believe that ARM has a similar sort of thing going on here with AI, because ARM architecture is what is used for a lot of these AI chips. NVIDIA uses them in their GPUs. They are used in basically all smartphones, so basically all mobile devices. They're used in VR headsets, they're used on 3D printers, they're used on every smart device you have has an ARM-based CPU inside of it. These things are everywhere, and they're expanding. They're even getting into the laptop market due to their low power consumption, and laptops need that sort of thing. In fact, Apple's M3 chip is going to run off ARM infrastructure. So ARM's got a lot. Like they're involved in everything, especially since they're involved in the AI aspect of everything. Oh, also self-driving. ARM is the basis of CPUs for the automotive industry and for self-driving. So Tesla is going to be using this infrastructure to run their cars, to run the AI that runs their cars. I mean, this is going to be everywhere, absolutely everywhere. And I mean, it already kind of is. Now, there are some risks to it, but that is the big selling point. These are the instruction sets that, like, this is going to be the basis of what AI is built on. This is already the basis of what all your cell phones are based on what your smartwatches are based on, your smart TVs, your 3D printers, your anything and everything that just has, a small, low power, simplified instruction set chip in it. It's going to be ARM. Now, there are some risks for this. Now, the biggest risk, well, there's two risks. One, I'll start with the smaller one first. The smaller one is that RISC-V, or RISC-V, maybe it is. I don't know. RISC-V. This is another open source standard instruction set architecture for CPUs, similar to ARM. And this one is open source and free, so it requires no royalties be paid to anyone for using this instruction set. So there are two big ones. There is the x86, which was invented by Intel and championed by Intel, and is in basically the majority of servers and home computers right now. Now, ARM is breaking into some servers as well for specialty cases, but it's not the broad market. The broad market is still that x86 architecture created by Intel. That was kind of their bread and butter for a while, but the future is mobile. So Intel's going to have to get with it, and you can see their stock over the years has been showing that they have not gotten with it. RISC-V is the alternative to ARM. So ARM is the other set of architecture. That's the other big one, and that has really been championed by mobile and smart devices and automotive. Then now you've got RISC-V, and RISC-V is not really being used too often. RISC-V is very similar. So think about this very similarly to, let's say, operating systems for computers. We've got two big ones, right? You've got Mac and Windows. There's a third one that's open source and free, and actually quite good, but doesn't have enough software built on top of it. And if you know what that one is, I'll give you about 4 seconds here to write it in the comments, and then we'll see if you're right. If you commented Linux, you got it. You win the sticker of day. So Linux, how many of us are using a Linux machine? I'm sure some of us are, and I'm sure that, and I know that they are very stable and good machines. It's a great operating system. It's a wonderful environment to use things with. But the problem is, for the majority of us, the things that we like to do in terms of like gaming and other sorts of things using Adobe products, that's all going to be Windows and Mac. So I don't like, I'm sure if we went back to the whenever Linux came out, they were saying, oh, this is going to be the destroyer of Windows. It's going to take over. It's free. It's open source. It's more stable, which it is. But just because it's a better product doesn't mean that it's going to take over. Something that's already entrenched, something that so many companies and people are already running all their systems on, they get comfortable with it, even if it isn't as good. Think Ethereum in the crypto market, right? There are other better blockchains, but Ethereum was there first. And Ethereum is pretty entrenched in that a lot of developers are already very comfortable using it. So that's why we have, Windows chugging along, even though it's not the best OS around. And it's split really between Mac and Windows. And in this case with CPUs, it's split between x86 and ARM. And ARM is gaining ground. Now, RISC-V could present some sort of a risk, and here's why it could potentially be somewhat of a risk in one particular market. Right? That market is China. All right, so China makes up 24.5% of ARM's revenue globally. ARM has a separate division in China from its main division. Now, if you know anything about how things operate there business-wise with the government, basically any big company needs to be government-owned, majority-owned. That's how it works. So they don't really like paying royalties for IPs, and RISC-V is free, so they don't have to pay anyone for it, and they can just build right on top of it, no problem. So this could potentially become a thing where in that specific market, they could start losing share. And also anytime you see any like geopolitical strains between the United States and China, you'll get some of this kind of pushing away from like generally American things in that respect. So that is a bit of a risk, and it is 24% of their revenue right now. But I'm not actually very concerned about that. And I do have a chart to show you why I personally am not concerned about that. Okay, so this chart here is kind of why I'm not super concerned about that going forward in terms of China being as big of a market globally in the next, I don't know, 10, 15, 20 years than it is today. And you can see this is the population pyramid chart. And if you look here, basically the majority of their population is above 35 years old. Like they're old and aging rapidly. They don't have that much population here below the 30 years of age level, and it's getting smaller. So let's compare that to something like India. Let's see something like India. This is where the population is going to be in the future. This is going to be the market that we're all trying to jump all over, drown each other over, just like we were with China 10 years ago. In 10 years from now, it's probably going to be here in India, especially if they get an income boost from some sort of catalyst. Because if you look here, the majority of their population is under 30. So in China, the majority of their population is over 30, and in India, it's under 30. And guess what? They have more people than China does, a bigger market. Now, if they get an income boost, this is going to be a market to be reckoned with. These are going to be the consumers we're all fighting each other over to get. And if they aren't, at odds with the United States government and don't really care about, what infrastructure their cell phones are built on, then they're going to keep building on ARM. So that's what I am looking for here. I think that India is going to be a significantly more impactful market here in the next 10 years or so, and this would be a longer term hold for me. This isn't necessarily a trade unless it went bonkers, in which case I'd be like, all right, maybe I should sell some. But this would be something that I'd be holding for a very long time into the future, unless the outlook changed for me personally. So people are scared. Oh, China makes up 25% of the profit for the company. It's such a risk because they don't want to use it. They want to use RISC-V instead. Long-term view, I don't think that's a problem. I don't think that's a problem. I think that their market will become significantly less important here very, very soon, sooner than we think. And I think India is going to become significantly more important as a consumer market here pretty soon. Another one that is on my list here that is going to become super important, much more so very, very soon, is Mexico. Mexico is also here. If we look at the population pyramid, the majority of their population is less than 40. A lot of manufacturing is moving there. They do a lot of commerce with the United States, and I do think that their incomes will get a little bit of a boost from that, and they'll start being a really big consumer market. So those are the two markets I'm really looking at going into the future: India and Mexico. They've got a young population, they've got a skilled workforce. They are very likely to become the big consumer markets of the future, alongside, the US, Europe, and Canada. Alongside those markets, these two will be a force to be reckoned with uh, going forward. So that's really why I'm not too concerned about the fact that 24% of their current revenue comes out of China. I just don't think that that market is going to be nearly as impactful 10 years from now compared to what it is today. That's all I'm trying to explain there. So we're not really trying to get into any kind of political fight or anything in the comments there. This is just my opinion. Maybe you have a different opinion about that. Maybe you think that this market will remain as relevant as it is today. I don't think that the population is going to hold up enough to make it continue to be an attractive market for these companies to target specifically. I think India is going to get a lot more interesting for these companies to target for their consumer goods, and I think Mexico is going to get um, a lot more attractive to these companies to market and get their revenue streams coming out of those companies versus China, because they have a declining population versus a growing population. That's all. That's really all it is. So the other thing I wanted to look at here is market beat for ARM. ARM has only 0.8 short interest. People are shorting this. Now, that's very interesting because, and you can't see it here. I'd have to bring up the Webull app, and maybe I will. Actually, I'll do it real quick. I'll bring up the Sage Tracker real quick on Webull, and you'll see who owns ARM. And ARM, this is my big issue with ARM. But I think I'll be going into it anyways. And of course, this is not financial advice and not a suggestion to buy, sell, or hold any asset at all. Who owns the vast majority of ARM? Vast majority holder is the holding company of SoftBank. SoftBank owns 90% of this company. That is the biggest issue I have here, is that one company controls 90% of this entire company. That scares me. I don't like that. But the fact that their products are in everything and it's only growing, the fact that their products are the base layer for building AI, the fact that it's in every friggin' TV and toaster and microwave oven on the planet, every single smartphone on the planet, every vehicle that has any kind of computer in it, every future car that's going to have full self-driving is going to have ARM architecture on it. So the fact that SoftBank owns 90% of this company isn't actually deterring me. And as you can see from the short interest, even after that massive drop off that we've really been in a downturn since February 26th on this stock, even with all of that, the short interest is only at 0.8%. And if you go over to something like SoFi, you'll see that their short interest, which is smaller than it was before, but is still significantly higher. Let me go over here, 19%. Let's go see what's Apple's. What is Apple's short interest? 0.8. We're sitting up there with Apple. How about Tesla? Bet you Tesla's is higher. 3% for Tesla, 3.37% for Tesla. What about Google? 0.7%. So we're up there with some of the fangs. What about Microsoft? Let's look at Microsoft. No, Intel. Let's do Intel. Sorry, I got excited. Let's do Intel. Intel has more than double the amount of short interest on ARM, 1.71%. What about IBM? Let's take a look at IBM and see what theirs is. What is their short interest? 2.54% short interest on IBM. So ARM, really, investors aren't too concerned about ARM even after all these drops. Now let's take a look at the chart. I know this is getting really long for ARM. I'm sorry, I just wanted to kind of go over all of the risks that I see that are present, the positives that are present, the things that are scary, and then let's take a look at the chart now. So the chart, we had a drop off. Wow, did we have a drop off? In 3 days, we lost. 3 days, we lost 30%. In 5 days, we lost, let's see, in 5 days, it lost 30, it went down 32% in 5 days. So that is dramatic. Will it stop here? It blew through a couple of my stopping points. I really thought that 93 would hold a little better. Now we got into this zone here. This is a danger box right here from 93 all the way down to 80. This is a danger box. We don't know which way it's going to go in here. No clue at all which way it's going to go in here. Since it sliced through so many levels of support so fast, I am looking for it to come down to 80. I would like to see it come down to about 80, maybe like 74, maybe 74. Let me put a line right at 70 right here, 73.33. I want to see that. Maybe down to 73.33. That's where I would see like bottom support at on this thing. I don't really see it getting any lower than that. If it came lower than that, 64 would be the next level. Let's put a level there too, I guess. 64. Bing. Hey, man. Whoop, there it is. All right. That's what I'm looking at. So like ultimate bottom on this thing is going to be about 64. If it broke through that, we'd be coming all the way back down to the 50s. I don't really see that happening. But one thing that did happen here that did change was on March 12th, which was back right here. Yeah, right there. When price was 129, that's when the insider shares unlocked for trading. So anyone that was insiders, which would have been anyone in SoftBank or SoftBank itself, could have done a sell-off. And honestly, that might have been what happened here. That might have been what happened here. That could have totally been what happened here. Some insider selling. There was let me see here. There was a 144 back on March 18th that was issued. If we go to SEC filings, there was a Form 144 on March 18th that was filed. So there could have been some insider selling there from that could have caused this. But I really don't think that's what it was, because there was really just one and one person, and it wasn't even that big if we look at it. If we come in here and we go to here, yeah, they were only going to sell 2,000 shares. That's really not that much. It was like, what, $2 million worth? That's nothing. So I don't think that's what happened there. Anyways, so we're looking for a reversal at 80. And honestly, I would be pretty comfortable around that $80 level, selling a cash secured put somewhere for about $74, $75, which right now, I believe those should be about 500 bucks or so that you could get off of those if you ran it for a 30-day out one. Let me take a look here now. Its current level is 87, so I'll check what it is at $80 actually. So about 80, yeah, it'd be about 500, just $500 to $600 for a 30-day cash secured put. That's about $5 out of the money on that. So if it came down to around $80, I'd be looking for trying to sell it like a 75, 74 cash secured put on this bad boy. Look for that reversal. And if it does a reversal, I'd start getting more and more aggressive as it looked like it was turning around, and start getting closer and closer to the money on its travel back up to like that 122 range. Because once this thing turns around, I'd be looking for it to come back up to about $100, give us a flag for a little while, and then go back up into that 120 range and hang out there for a while. Because I do think that this thing will see more upside going forward. Once we get back above this ascending trend line, this red red dashed one right here, once we get above that, that's when I'd be looking for kind of it to start to bounce off of that. Because we cut through all of the SMAs, all of them. All the ones present anyways. Like, we're so far away. The 5 days all the way up at 110. So that doesn't mean that has to turn around right now and go back, but it does mean that we'll probably come back up, test the bottom of this ascending channel right here around $93 on Monday or Tuesday before making a move any further down towards $80. So I do expect a little bounce for a day or two before making a move back down to that $80 level right now on this, because this fall was just so dramatic. Either that or a sideways move for a little while so that the 5 can catch up and catch us somewhere, below $100 maybe, if it does a bear flag for a couple of days before moving down a little bit further on ARM. So that's what I'm looking at on ARM right now. I'm really excited about this one. I think that this is potentially a really great future company with a lot of promise to it, especially with it's just so embedded in our daily lives and in technology that we do fully expect to be the future of humankind. So I'm very excited about ARM coming down the way it has. I've been waiting for this day ever since February 8th when we got this big jump off of those earnings. I've been waiting for this to come back down under $100. I really didn't think, I thought I would probably reserve to be like, okay, I'll pick it up at 115, but then it just sliced right through it in a day. I said, okay, well, let's see where it's gonna go from here. And it just fell so dramatically. And this is what we're waiting for, this sort of thing, right? Like I'm just waiting to catch things at these types of levels. And I want to see how it reacts here now. So I haven't done anything yet. I'm just waiting. I'm just sitting and waiting on this thing right now. And when it starts to turn around, that's when I'll start going into those cash secured puts and collecting my premiums until I get assigned. And then when I get assigned, the fun really begins because the calls are really way more expensive than the puts. But selling the covered call, if it goes up too high, well, then I get screwed out of the upside of the stock and I just collect the premium, which isn't as fun. So we'll see here. We'll see what's going to happen with ARM. And ARM is just, I think it's one to be on the radar. I think it's one to be on the radar. Of course, this is not financial advice and not a suggestion to buy, sell, or hold any assets whatsoever. This is just a stock that I'm kind of excited about, that I've been watching for a while, and I wanted to bring to the channel and discuss some of the pros and cons to it and why I think the way I do about this stock and where I am looking at it for a potential buy slash, selling cash secured puts off of it for. And that's kind of just what I wanted to bring to the table today. And so with that said, please like, comment, and subscribe, and have a profitable day.